Thinking about buying a new car and financing it? In this video, we're talking about car loans. Car loans are a really common way for people to acquire a car, especially when you really need access to one. In this video, I'm going to talk about car loans and discuss why I think that there are some good things about them and there are some bad things about them too. Things that you should be considering if you're planning on potentially taking out a car loan and buying a new car. What is a car loan? A car loan is vehicle financing. It is where you go and borrow money from a bank or a lender to purposefully buy a car. It can be a new car, it can be an old car, but to buy a car. Breaking it down simply, there are some pros and some cons. The biggest positive about taking out a car loan is that it gives you access immediately to a vehicle, if not a better vehicle than the one you're currently driving. And if you're in the workforce, companies sometimes offer something called a novated lease, which is essentially a way to save money on tax when repaying your car off. I'm not going to get into what a novated lease is in this instance, but it can be beneficial to high income earners. Having the privilege to acquire a new vehicle comes with some tiny downsides, and one of the biggest ones is paying interest as well as paying fees which come with the car loan. I'm going to give an example of how interest can accrue over the time of a loan, which can lead to an even bigger problem of the risk of defaulting on your loan, meaning your car or your vehicle can be seized if you fail to make the required repayments after a certain period of time, which does happen. It's a risk taking out a car loan. A consideration that definitely should be made but is not as impactful is your credit score. Credit scores in Australia aren't really a thing. It is something that banks do check when it comes to buying something like a house, but in general, it's not something that you need to build up like in America. It's something that you should be mindful of, but not something that is ultimately going to make you decide if a car loan is for you or not. And ultimately, even if you do make all your repayments, you're going to result in having a vehicle which has depreciated in value, but that comes with any purchase. Even if you were to buy a brand new car with cash, it will depreciate in value very quickly. That's generally the game with cars. All right, so here's a good example. So let's say you are taking out a car loan of $20,000 at an interest rate of 6%, which is relatively competitive. I've seen some that go really, really high, above 10%, and some that are down the 4% mark, which you have to really fight to get. An average loan is about 5 to 6 years. In this instance, if you were paying 6% on that, you would spend about $3,865 in interest. So let's just put together the $3,865 and the $20,000. You're going to result in $23,865. Pretty simple maths. There are other fees associated with getting a car loan, which would bump it up. Let's just assume up to about 25 grand. At the end of this little mini experiment where we're using relatively low figures and approximate numbers, you're going to spend about $5,000 more to acquire the car in the first place. And ultimately, like I said earlier, the car will depreciate in value over time. Now, this is a very simple example. The general rule of thumb here is that the more money you borrow and the higher your interest rate is, the more money you will pay to obtain your car, and it will depreciate faster in value because it will lose more value faster. Why is this a problem? You're essentially throwing money away. It's not money that is going to give you a return. It is interest. It is a repayment to someone else. You are paying for the service. Just in plain and simple terms, you're paying a premium to have this vehicle. The real question you need to ask yourself is, do you need it? So here's a prime example. On a $20,000 loan at 6% over 6 years, you're going to spend $3,865. That's the number I had before. Now, let's see what happens when we increase the price. So let's say you take out a car loan of $30,000. At 30 grand, at 6%, interest rate hasn't changed in the same period of time, you're going to pay about $6,000 interest, which is another $2,000. The more money you borrow, the more interest you pay. Same thing goes again. Let's say your interest rate goes up to 8%. There's another 2 grand. The whole concept here is that the higher your interest rate is, the more money you borrow, the more money you're going to lose. I've left a link in the description below so you can actually use this little tool yourself, as I found it to be really helpful and just a really quick indicator of what you'd be looking at for a specific purchase and interest rate. I just wanted to cover that just as an example, just to give you perspective. It's obvious, and I'm sure that you already knew the concept that was there. That's why you're here watching the video. But in saying that, it's still something that you should be reminded of, that it can be a really expensive thing to do, and you really need to question if you need to do it. Interest rates come in two forms, variable or fixed. Variable means that the lender can change the interest rate at any time without any notice, making it go higher or lower. So if you're at 6%, they can make it 7% tomorrow. It's unlikely that it would jump as vigorously as that, but that's the example of a variable rate. Fixed rates are where you tell your lender, hey, please lock it in for 5 years at 6%. And if they agree to it and it stays low, great. Generally with fixing, there are some things to consider, but just for the sake of this video, it's not something that I'm going to go into. They're your two options, and you should do your research and due diligence into both. If you are getting a car loan, pick the right one for you. What should you do? Save towards buying a car that is within your price range and take care of it. That is simply the thing that I would suggest doing. If you want a $30,000 car, but you cannot afford a $30,000 car, don't buy it. If you need a car and you have no savings whatsoever, worst case scenario, you may need to look into doing this. But if you have the option or the luxury of not have to do this in that moment, buying a car that's within a price range that you have actual funds to put towards is always going to be your best bet. Things about car loans that you may not have considered, like I mentioned earlier, is defaulting on the loan. It can be a serious issue if you lose your car. The lender or the bank will take your car if you do not make those repayments. You lose the asset and all the money that you put towards it. Depreciation, we've covered it a few times in this video, and that's over time, cars devalue. They are not good investments and they never have been. General everyday cars are not collectibles. They're not going to appreciate in value. So you're going to lose money on the investment of buying a car no matter what. Lots of car loans come with something that's called a balloon payment, which allows the person who has the car loan to make a large lump sum payment towards the end of the loan, which is also something that could catch you out if you weren't prepared for it. Collateral and security means that when you sign that lease, the car is collateral. If you don't make the repayments, they take the car. Just as the same goes for a house and someone going guarantor for it. If you don't make those repayments, they will sell that house to get their money back, just like they will sell your car to get that money back. It's a business for the banks and lenders. They're there to make money. It is either a lifeline or a luxury for you to drive a car. And extra fees being tacked on. Always read your product descriptions. Always make sure that you know what you're signing. If you are ever going to take out a car loan, make sure you read that contract top to bottom to make sure that there are no hidden fees associated with the contract and you are getting the best deal possible. If you are considering getting a car loan, make sure to get quotes and compare interest rates between banks, lenders, websites. Just do as much research as you can and get that interest rate as low as possible, because ultimately it will result in you paying as little interest as possible, basically saving you money. That's the purpose of this channel, is to inform you in ways on how to reduce unnecessary spending. Ultimately, I wanted to cover the topic because it is something that I've known people to do and I know people who have thought about doing it, and it's a very interesting topic because there is no right or wrong. If you need to do it or you really want to do it, you can. Just be aware that it will come at a price and it's generally more money than what you should be paying for that vehicle. I hope you enjoyed the video. I'll see you in the next one.